The GTA market is not going to rebound in 2026. It's going to break in certain areas. And if you own a condo or you're highly leveraged, you need to hear this.
That's some bad news.
Because almost half of the listings last year, they didn't even sell. They got canceled, terminated, relisted, and then canceled again. That's not a normal market. That's a market where sellers are in denial and buyers are in complete control. And now we're walking into 2026 with record inventory coming, mass mortgage renewals, and a condo market that might honestly be the biggest mess we've seen in over a decade. So today I'm going to break down my full 2026 forecast for the Greater Toronto Area. Sales volume, prices, interest rates, condos, detached homes, and which regions I think are going to get hit the hardest. The GTA market will be a pressure cooker market. And there are two forces fighting each other. So prices are coming down and there's more inventory, making it easier to buy. And then you've got mortgage renewals and weak economic momentum, making it harder for sellers or owners to hold.
You're going to need a bigger boat.
But we're going to start by zooming out and looking at Canada as a whole. So monthly home sales in Canada are basically flat. They're hugging the 10-year average. Record low interest rates during the pandemic royally messed up the housing market. In an attempt to protect the economy, many decisions like insane rate cuts, which led to sky-high prices and affordability, were made without long-term consideration in mind. And this is not a market that looks like it's gearing up for a big run. It looks like a market that is going to be stuck. And that's why my first prediction for 2026 is this. I forecast that 2026 sales in the GTA will be slightly higher than 2025. So in 2025, there were about just over 62,000 sales, which was down 11.2% from the year previous. New listings rose by 10.1% to 186,000. Now this number is a bit distorted as most listings would come off the market and then come back on the market to appear fresher. So that listing number might be a lot lower. Now, the average selling price also dropped 4.7% from 2024. Now, me saying that sales will go up and that there'll be more activity doesn't mean the economy will be doing amazing or prices will go up. It just means that more activity will occur. Now, because prices have come down enough that first-time buyers are stepping into the market and they're trying to finally own their first home or get into a more desirable neighborhood that eluded them before, that is what's going to spearhead the activity in 2026. I also expect the key interest rate to remain mostly stable in 2026. And even if we were to get a rate cut, it likely won't swing the market, if at all, because this is exactly what happened last year and it didn't really do anything, right? So sometimes people think rate cuts mean prices are going to go up, buyers will activate. But if affordability is still broken for a lot of people and their wages aren't keeping up, a quarter point cut doesn't really make a home that much cheaper. If we do get a cut to the key interest rate, it will be late 2026 and probably only a quarter point. But this is where it gets interesting, is that while people obsess over rate cuts, I think something else is going to decide the mood of the market. By the way, if you're new here, I'm Carl. My team and I have helped over 300 clients buy or sell across the GTA. And every buyer of ours gets a home warranty that gives you up to $15,000 of coverage if a home system or appliance needs repair or replacing. And just for January, if you contact us by the link in the description, doesn't matter when you buy, just that you reach out, we will give you a 4-hour move-in cleaning service on top of the home warranty. This is all free, just ways we make working with us a no-brainer.
That is an amazing offer.
So we're kind of cool like that. And if you reached out in January already, don't worry, you're going to get hooked up. So, prediction 3. The biggest factor in where the market goes in 2026, I think, isn't interest rates. I think we've got to still talk about the trade deal with the United States, right? If a trade deal situation with the United States, if things get worse, and honestly, it sure looks like it's trending that way, consumer confidence drops, and when the confidence drops, real estate will go bearish, right? But if somehow a deal were to get reached, I think that that would probably be the only thing that could throw off my predictions that I'm about to tell you, as people would then maybe think that that would be the bottom. But the biggest shift I'm seeing in 2026 is I think first-time buyers are going to be the largest segment of buyers. And here's why. For the first time in years, buyers can browse lots of inventory. They can negotiate aggressively, and they can get every condition. So they've got a lot of protection with financing clauses, inspection clauses, right? They can go back and forth, and they can kind of get into a much better situation, right? They're not walking into a 25 offer chaos anymore, where you have to go in firm and you have to risk everything, right? So I think it up to a lot of people are going to be looking at home ownership. For 2 years, move-up buyers were keeping the market alive, or people that were pulling equity out of their home to buy investments, or people trading up from condos into detached homes. But in a slower market, many of those people won't want to sell probably, and probably be thinking, well, why list my house if I might not even get my price? So the trade-up cycle, it does slow down sometimes for people, depending on how much equity they have in their home. And yeah, first-time buyers are going to become the engine of the market. So before I even get into the 2026 predictions, let's address something that you're going to see everywhere this year, right? So a whole bunch of different predictions, right? CTV is already reporting that Ontario home prices will go up by 0.8%. And then you've got a lot of realtors online saying, this is time to buy, don't wait, before the spring market. A lot of that messaging isn't advice, right? It's pressure tactics, and it's people trying to create urgency in a market that doesn't really have much urgency. And so I never tell clients when the right time to buy is. I think the market doesn't decide when it's the right time for you to buy either. And surely headlines don't as well. I think the right time to buy has actually nothing to do with the market and what it does next month or in 6 months. I think the right time to buy is when you can afford the payment, when the property that you're planning to go to improves your quality of life, and you love the property that you're looking at. I think that's it, right? So you need a budget, and that budget needs to get you a home you actually like in the area you actually want to live in, without financially trapped. And if those things line up, great. But if you can't afford the home, or the only option in your budget is something that you would hate living in, then don't buy. Now, another thing that's going to happen in 2026 is we're going to see a record amount of terminated and canceled listings. So in 2015, there were 55,000 terminated canceled listings. In 2025, there were over 158,000 terminated canceled listings. And I think in 2026, I think it's going to be even more. And it is a market where sellers are failing to sell. Now, in the comments, I'd be curious, where do you see the market going? I would love to hear your predictions. And my prediction number 5, I think there's a chance that our inventory could reach record levels in spring. Because a lot of sellers, they canceled their listings heading into winter and the holidays. And so now people are starting to list those properties again. And so you're going to see a big wave of listings starting in February to come out. So spring could feel like, hey, there's a lot of options. And that will obviously create downward pressure on prices, right? Especially in the weakest segments. Speaking of weakest segments, it's the condos, right? I do think condo owners will have trouble selling in 2026. And it's not going to be a small problem. It's probably going to be a big one. You see, there's very high inventory, pre-construction supply coming, and a lot of people, they can't even close on their units. And I'm going to say something blunt here, but yeah, there's going to be a disaster in the condo space. I think condos across the GTA, I'm forecasting a 7% decline. And if you're trying to buy a condo, you're going to need to negotiate a substantial discount off the asking price. You want to protect yourself from future depreciation. Right now, they are the softest part of the GTA market. And I am seeing some people jump in at these prices. Now before I get into my overall forecast, if you guys like this content and find value, please to give the video a like and subscribe. It helps me a ton. Now, I think the GTA average price is going to fall 4.5% in 2026. Detached homes, I think they're going to hold value decently because people are going to target them that couldn't enter them before. I think the homes above 2 million, that's where we're going to see a little bit more pain. Now, townhomes across the GTA, I think they're going to fall 5.5%. And a big reason, obviously, is going to be as the condos get hit hard, they're going to get pulled down with it a little bit. And across the GTA, I am forecasting a 7% decline in condos. I wouldn't be shocked if some pockets do worse. But let's talk areas now, right? I think certain areas will bleed a lot more than others. And I think the one that's probably going to get the hardest, and I hate to pick on it, but it's just the way she goes, right? Brampton. I've been preaching this for months. Brampton was propped up by international student demand, basement rental demand, bad and fraudulent mortgages, and extreme leverage. And now what's happening is rents are falling, renewals are coming, and lenders are scrutinizing risk more and looking at the mortgage files. And Brampton is leading the GTA in bank foreclosures. And so I expect Brampton to continue bleeding value. And I think in 2026, they will be hit very hard with regards to value. I also think if the trend of things cooling down still keeps progressing, even though Durham is in demand, I think Durham will be volatile. So in hot markets, it always spikes fast, right? And in cold markets, it drops fast too. So for buyers, Durham's going to be pretty attractive in 2026 because upsizers or people from the city, they're going to go to a place where they can actually get a home that they could raise a family in. And so Durham, a lot of the people live there, love it, right? All my clients in Pickering, Ajax, Whitby, they love it. Oshawa, you just have to be selective with the areas that you're in. There are still pockets you probably want to avoid. I think York region, right? So we're talking probably more the northern areas like Georgina, Newmarket, Aurora, Stouffville. I'm thinking there's going to be probably about 5% to 6% declines, mainly because move-up buyers are slowing down and there's a lot of supply out there that's sitting and taking a long time to move. So Toronto, it's going to go down, right? The demand in Toronto, however, is still there, and buyers will take advantage, but there's just too much supply. So the buyers are going to get good deals, and the prices are going to fall. And there is also a lot of Canadian mortgage holders, right? They're going to be facing higher monthly payments when their mortgage rates renew in 2026, right? So anyone who got a 5-year fixed rate in 2021, 2022, right? Really low, under 2%, probably around 1.5-ish. Right now, they're probably getting interest rate around 4%. So that's a pretty massive payment increase. And so if someone also owns more than one property, it's going to get hard to manage those things, right? So that's why I think forced listings are rising. You're seeing bank sales rise. And that's why the inventory is rising, right? So this market isn't collapsing because people want to sell, but it's collapsing in pockets because people have to. And they're taking offers that they probably didn't want to, but they have to. And so it drags the prices down for everyone. Now, what do the big banks think with regards to 2026 and the interest rate, right? So BMO thinks that rates will be cut. Scotiabank thinks that there'll be a rate hike. So does the National Bank. CIBC thinks the rates will stay steady and hold. So does RBC at hold and TD at hold. So you can see it's all over the place, but the overall theme is no one is forecasting major interest rate cuts, right? So it's a buyer's market. First-time buyers are going to have the best opportunity they've had in years. Condos are going to struggle. Sellers are going to face record competition. And the market will depend heavily on employment trends and economic news, I think. If you want my help buying smart, negotiating properly, or selling with the right strategy, contact me by way of the links in the description. And I'm always happy to chat more and learn more about your plans and see if we can be of help. Till next time, thanks for watching.